Welcome to Money Talks, a series covering a range of financial topics like budgeting, understanding credit, planning for retirement, and so much more. It's all about helping you feel confident in your financial future. Hi, I'm Lila, and today we're talking loans. What is a loan? Essentially, it's a way to borrow money with the agreement to pay it back. It sounds simple, and it can be, but not all loans are made equal. However, with most types of loans, you'll be required to pay back the original loan amount, called the principal, as well as interest charged on that principal. Think of it as the cost of borrowing the money. With that out of the way, let's start by going over a few of the most common loan types. Some are familiar, like car loans, home mortgages, and student loans. Others include personal, home equity, and debt consolidation loans. Each has a specific purpose, but they all follow the same basic design. Loans come in two general forms. A secured loan requires you to use an asset you already have, like a home, as collateral. If you don't pay back the loan, then the lender can take possession of the asset. Auto loans and home mortgages are common examples. Unsecured loans, such as credit cards and student loans, require no collateral. Because of this, they can be considered riskier to the lender, so unsecured loans typically charge a higher interest rate. There are also less conventional loans, such as payday and buy now, pay later loans. Payday loans are typically small, short-term loans offered in return for a signed check that will be cashed on your next payday. These types of loans can be expensive, as much as $30 per $100 borrowed, and should only be used in an emergency. Buy now, pay later loans let you purchase an item, take possession of it immediately, and then pay for it over a set number of installments. This agreement is typically made directly with a retailer and can be a relatively inexpensive way to spread out the expense. Most adults will take out multiple loans in their lifetime, whether to buy a home, a new car, or make a simple online purchase. In this way, loans are a vital financial tool, but they're not the right tool in every situation. So, how do you decide when borrowing is the right strategy? The single most important thing to consider is whether you can comfortably afford to pay back a loan, which is typically a monthly payment over a specified period. Every financial situation is different, but no matter where you are on your financial journey, you should have a plan in place that will help keep your payments on track. That means those with an already high level of debt may want to reconsider borrowing more. Okay, you've decided you need a loan, and you're certain you can afford to pay it back. What now? First up is checking your credit score. Scores typically range from 300 to 850, and the higher the score, the better your credit, and the better rate you'll likely receive on your loan. If your credit score needs work, you might be better off waiting until you can improve it or use a cosigner who can boost your credit profile. Next, compare interest rates at a range of institutions. Start with a credit union or bank you already have a relationship with and compare their terms with competitors. Generally, the lower the annual percentage rate, the less expensive the loan. But keep in mind some institutions will charge fees as well. Don't be afraid to ask the financial institution directly about any additional costs you're unsure about. If you've made it this far, congrats! You're ready to apply for a loan. Just remember to stick to the terms of the loan, especially by making your payments on time. Otherwise, you'll likely incur additional charges or other penalties. Deciding whether to take out a loan is a big choice, and there's lots to consider. But with strong planning and discipline, loans can be important tools to help you get to the next stage of your financial journey. Thanks for joining me today. Want to learn other financial tips and tricks? On Selco.org, you'll find blog articles, videos, downloadable worksheets, and more. Investopedia and NerdWallet are also excellent resources. And be sure to stop back for our other Money Talks episodes. See you next time.